Hi, guys. Happy Tuesday. Welcome to another Trading Crypto, another Blockchain Banter. I'm Jen, I'm your host. I'm here with Keith Allen, TA and algo trader, order book analyst, and co founder of Material Indicators, along with Mark Richardson, project lead at Bancor and Carbon DeFi. Um, Thank you guys for joining me. Love our Tuesday calls. I feel like a lot has happened, especially since we weren't able to connect last week. And I think, if I'm not mistaken, we just hit over 90, which I see people celebrating now. The Bears are dead and the Bulls are back. And, you know,
Right. And until the night and until somebody takes profit.
well, and this is kind of what this call was about, right? Like, is this actual momentum all over again? Or is this, spoofy? Like, what is actually happening? And Mark, I also wanted to visit, since you brought up the gold, like trading Bitcoin versus gold, I've been seeing more and more people talking about, like, of course, gold in and of itself, but kind of making this like, how would I go about doing this? So it's kind of interesting to see now. I don't know if they caught our call or if they saw the clips that I put out or whatever it happened to be, but either way, it's an interesting idea that more people are talking about. So that was kind of cool to see. What are you guys, and if you have more of those you want to share with us, by all means. But what are your guys' thoughts? It's been 2 weeks. I know that a lot has happened, but anything specific that you want to point out or, highlight at all for our viewers?
Mark, you want to go
Keith, go right
first?
ahead. No, I've been heads down. I haven't looked at a price chart in like 2 weeks. So
Sometimes it's kind of nice.
You,
Have you at
you, you
least
know, you know, it's
touched grass
it's
when you're
funny.
head down?
Like I obviously track my performance and keep a log of what I'm doing every sometimes every day, every at least weekly closes of tracking my portfolio. And I hadn't done it for a couple of weeks, and yesterday I looked at it and it was literally at exactly the same price. My portfolio was exactly the same level it was like 2 weeks ago, or whatever the date was. I don't even know. But my
It's
last
not necessarily a bad thing.
whatever my last entry is. No, it's not a bad thing when especially when you're in a consolidation and we've had some dips and whatever, right? So the in my opinion, the I guess biggest issue with all markets is unchanged. We have this uncertainty because we have this guy in the White House that does and says things that make the market nervous, right? So it's still a risk-off environment. And why is it a risk-off environment? Because nobody fucking knows how this is going to all shake out, right? I mean, like the tariffs, we understand it's a negotiating tactic, but we don't know if it's going to end up at zero or if it's going to end up at 150% or somewhere in between. I think the president might be surprised that China did not roll over and in fact is retaliating and making things more difficult. And then his recent comments about Fed Chair Powell, the market doesn't like that. The market doesn't want to see him fire Fed Chair Powell. And if he does, what's he going to put? Who would he put in there? Do we think that he would put in somebody there that would have the country's best interest at heart, or do we think he would put somebody in there who is going to be a yes man? The market doesn't want that, and so that's why it's still a risk-off environment. That's why, TradFi has been getting annihilated. Now today, there's a bit of a recovery because people feel like Powell's not going to roll over. Trump's not going to be able to do this. He's got to be realizing that the market is not keen to what he's saying and doing. But who knows, right? So there's over the past few days I've heard, is crypto finally decoupling from TradFi? We heard the same thing a week or two ago. I'm hearing, and in my opinion, a couple of days does not define a trend, right? I look at it as a divergence until we have another event that changes, what's going on. But the bigger picture is still it's risk off. So then a recent narrative I've heard is, hey, maybe crypto is front running TradFi, like markets have bottomed and Bitcoin is front running. Maybe, but we're about to hit key resistance. And I think that this is really, we've had some nice momentum here the past couple of days, which is good. Certainly enjoying that and riding it and taking some small profits on alts and some smaller, some of my higher entries on Bitcoin, but for the most part, my Bitcoin stack remains intact for the long haul. But it remains to be seen how this is going to play out, right? Are we going to see a rejection where at the moment it looks like we're coming up to the 100 moving average? Maybe. Let me see. Let me actually get to a chart and see.
While you pull that up, you brought up China earlier.
Yeah.
Did you guys see anything about China selling a whole bunch of Bitcoin and buying gold? Some people were calling this out and talking about it. Well, Mark, I mean, you were saying you kind of had your head down for a little bit. Keith, I'm curious, did you see anything about it?
I didn't see it.
It was quite a bit of Bitcoin too, and quite a bit of gold that they were buying. And some people were speculating, granted, we're seeing this momentum, but what does that actually mean if they are buying this much gold versus Bitcoin?
Well, there is. I think a lot of what we've been seeing here in the market, especially on the U.S. dollar side and the TradFi side, is that the dollar is devaluing. People are fleeing the investment in USD and they're moving to gold and Bitcoin. And gold obviously has some history. Gold is appreciating some value now as well, but gold doesn't typically have the kind of gains that it's recently had, right? Do we? And it's not something I track much. So Mark, you can probably shed more light on this. But how common is it to see 30% moves in gold?
It's very,
right?
very
Yeah.
It's very, very rare. So I was speaking of resistance, and in fact, as we speak, and I'm going to go ahead and share a chart with you, because as we speak, I'm watching Bitcoin attempt to challenge resistance at the 100-day moving average and the prior range, kind of top of the channel of the prior range that we were in at 91.5. So we're prices right now at 90,800 something. Here, let's share this.
Let's see it.
Okay, so here's the blue 100-day moving average. Here's the top of that channel that we were, this acted as support for a long time until it broke. But the most important level here is this 2025 open. And so we obviously have to do this, level by level. And we have a heap of ask liquidity here on fire charts, and it's actually getting stronger. This is our friend Spoofy the Whale. If I zoom out, let me refresh and zoom out to a higher time frame, we can see how long we've been playing this game with Spoofy. It's been going on since early March. This block has been here this one's actually been in place for the longest, since we started playing this game. And it has built up a bit, and in the last few hours, it's gained even more strength. So there's more liquidity stacking there, whether it's the same entity or others just stacking on top of it. I don't know. But there are some positives here. We've seen a lot of buy volume, and specifically those purple whales that I like to watch. They've been historically the most influential over Bitcoin price over the years. Brown did sell, but it wasn't a lot of volume here. This move from here, which was, and this is a normalized view. So this is this is deceiving for some people who don't understand how this works. In a normalized view, each of these order classes in this bin CVD are buying and selling, up as a buy move, down as a sell move, and it's relative to what that order class has done. So if I isolate all the, let's just isolate Brown here for a second. It looks like, oh man, Brown bought a bunch and then they dumped. Well, in reality, Brown only bought about $6 million worth in the last 24 hours. Okay. They started at zero. They did about 6 million. I got to get another thing up here so I've zoomed it out of the range. Where is it? Why is it not showing? Oh, because I turned the tag tool off, dude. There we go. It helps if I have the tools on. So you can see that Brown, they had maxed out in this time frame at about, that's the bottom one there, $1 million to $10 million orders, 3 million. So not even. I said 6 million. It wasn't even 6 million at that point. They sold, they bought some more, up to 2 million. So it's bottom line is this low volume, right? Low volume on Brown. So what looks like big moves on the normalized CVD really isn't that big in the grand scheme of things. So it's normal to expect some profit taking when we're hitting these key technical resistance levels, right? I mean, we can all agree on that. So when we see when we see some selling up here, that doesn't give me any cause for concern. And what I do like seeing is, and if I zoom out a little bit, you can see that we've seen this shift of liquidity moving up here. That was an indication that we were going to see, kind of the price action that we're seeing, right? We saw bids move up higher. We've seen it happen incrementally on, in the lower time frame where bids were moving up, and they continue to move up. So there's sentiment. Had a discussion in our Telegram channel about, somebody was saying, it seems like social media is really quiet, and what does that really mean? And I'm like, I don't care if social media is quiet because I'm seeing everything I need to see in the charts. And he said, well, I'm a sentiment
kind of nice
trader.
when social media is quiet.
Right. He said, well, I'm a sentiment. I pay attention to sentiment. Okay. Well, liquidity equals sentiment, and sure, that can be skewed with spoofs, right? We can see liquidity in the order book, but if it spoofs, it was a fake out. But what is immutable, in my opinion, is order flow. And here's what we saw. And at the time that we were having the conversation, I mean, purple whales were buying, and then they said, oh, they put up a big wall. They put up a big short wall at 89. Well, they were buying right through that, and I could see that. So I didn't panic. I didn't sell. I just let it keep going. And obviously that's paid off now. And we can see even these subtle little movements, asks floating a little bit higher, right? So there's still some sentiment here for price to go up, but we have two forces at play here. One is this massive amount of ask liquidity stacked here at 92, but the real technical resistance, in my opinion, is where we have the 2025 open, and that is right here at this level.
93.5.
Right. So we obviously we have to clear this 100-day moving average. And if we go to the weekly, there's some confluence with where the 21-week moving average is. This is a new indicator I'm playing with, but it shows us quarterly and yearly opens. But when I just changed time frame, something jumped on me. So I'll show you again. It's at that 93, 93.5 level is where the yearly open was. And we have confluence with the 21-week moving average right in that range too. So lots of this is obviously important technical resistance, but this is the real deal right here. This is, in my opinion, the strongest technical resistance on the chart. And for us to resume the trajectory of the bull market and get back to that quest for new all-time highs, this is the RS flip that needs to happen here. And I'm okay if it doesn't happen today. I'm okay if it doesn't happen this week. Staying above this trend line, this is the first flip here, right? Flipping this trend line and the 200-day moving average, that's a big deal. And we still have to close above this. Yesterday, that attempt failed. Today's attempt looks better. Yesterday was decent volume. Today looks like we're on pace for decent volume, and conceivably more when it's all said and done. And so where do we end up? If we can close this above this 200-day moving average, then I'm happy that this rally is, still intact, and we might, continue to see momentum here. Obviously, if that fails, then we go back and retest support here in this range. Now you got to think of the psychology that's happening in the market right now too, right? So there's a bunch of people who are sidelined who are now going, "Oh shit, everything's moving. I got to ape in." Do not ape in at technical resistance. Okay. So at this point, if I was not in a position at this point, I would probably be waiting to see how price interacts here at this yearly open, because the risk reward just isn't really there in my opinion. What's that? We got 2%, 2.5% to the upside, and a little more than that to the downside. So that's not a good risk reward setup in my opinion to take this trade. Now, if you come back down and you retest support, I like this support. I like this trend line. But you want to wait and see if buying continues, because we've obviously broken this before. We could go back and retest this. The door to 69 or 71 is not closed yet, right? Not until, in my opinion, not until we have a sustainable RS flip here at this. That's a resistance support flip for anybody not familiar with the jargon. Until we flip this yearly open. This is
Keith,
the key spot.
go ahead. I'm so sorry, but I think you're saying so many things here, and I wanted to stop you because I think they're really valuable, and I don't want to just run right through them, right?
Okay.
First we're talking about sentiment, and I was joking and said it's kind of nice when crypto Twitter is quiet, right?
Yes.
But you said liquidity is sentiment.
Liquidity is sentiment to the extent that liquidity is legit, right? When that liquidity spoofs, well, that's a tactical trap, right? On some entity's account. And we know, just through our history, we know that what's here at 92, this is the entity we've dubbed Spoofy the Whale. So there's a chance this spoofs, but it hasn't yet. In fact, it's fortifying. It's getting stronger at the moment. I'm actually a little bit surprised that it hasn't moved. But if you remember a couple of weeks ago, we talked about when he was buying in this range, and I had mocked up some charts that showed that. And if you scroll my X feed, you'll see those charts and those analysis where we saw that Spoofy was buying. So I did expect to see some profit taking at some point from Spoofy, and maybe that's happening here. Now, the part I'm having a hard time understanding is why wouldn't you just let it go and make more money to the upside, unless you're trying to suppress price for a short, or you're trying to trap people here. You're trying to lure in some shorts, and then you're going to squeeze them.
When we're talking about so many traders, we look at sentiment on crypto Twitter, and we're talking about how liquidity can be sentiment or is sentiment, right? We're talking about spoofy. Generally when we talk about trading, we talk about trend lines and things of that sort. But when you're looking at the liquidity in the order book, you can notice trends also.
Sure.
right? So even if there is a spoofy, you can still see that trend and you
Right.
can still get so
S-
much
So,
information
so
from looking at the liquidity.
everything is obviously not spoofy, and the majority of what's
Of
in the order
course.
book is not spoofy. So here's where we can um, infer some sentiment. When we see liquidity moving, rising higher, floating higher in the order book, and that includes bids and asks, right? We're seeing this stuff move up. So that's an indication that the market wants to see things go up. And the part of sentiment that I don't think is subject to interpretation, the part that I think is immutable is order flow. When they're buying is buying. There's no disputing what the sentiment is there when we see the buy volume coming. So we've seen that. Now, obviously, in the last couple of hours, as we hit this high level, we're seeing a little bit of profit taking, but we haven't seen a bona fide dump. In fact, there is some selling among the order classes, most of them, anyways. Um, this yellow, this divergence here, isn't necessarily retail getting wrecked. Retail does live in this class, but whales often use this class um, to TWAP. So, in terms of what what profit taking might be happening here, there's been a lot of selling. You can see here. So we're on this normalized view. Blue is the sum of all of these different bins, right? So blue is like true CVD, and in this normalized view, we can see that they have sold. This was their 100% level, right? They sold, they bought back in, they bought back upwards of 80% of what they had peaked here, right? And now they've sold almost down to 20%, right? We're now down to um 28% remaining of what they had of what their max was here. That's just the daily order flow. And we can see what this means in real dollars. At the max, it was 100 million. They sold, they came back to 84 million, and of that 84 million, they've sold almost all of it. There's 6 million remaining. That's a net on all order classes combined, 24 hours. And again, these are market orders. People hear these numbers and they go, "Oh, that's not a lot of money." It's market orders. It's not the sum of everything in the order book. These are just market orders. So, um, in that regard, we've seen roughly 100 million sold, and price is holding pretty well.
Right.
Price is holding rather well, in my opinion.
Yeah.
So, this is still a target here. Whether we make it across that or not remains to be seen. But I have not given up on the chance of this breakout. Now, what I would be cautious of is if we do see a bigger dump, this could spoof. This
Okay.
support level here at 83.5 could conceivably spoof. So, there's always I'm always skeptical. I'm always watching for that, especially when we see large blocks of liquidity moving. So those are things to be mindful of. But the fact that we see these other levels of bid liquidity coming in is a positive sign, right?
Keith, sorry. Yes, no, it is. I see that what is that, 92 or so that we have that ceiling at right there? Where we're
Mm-hmm.
seeing that liquidity come in, less than 92.
Yeah.
Okay, and earlier you were talking about like 93.5 or so being that sort of
Right.
resistance
So
level, right? So we need to break
interestingly,
through that. Go ahead.
right. Interestingly, we don't have a ton of liquidity stacked at 93.5. This is kind of like blocking it, right?
Right.
So this is
Hmm.
this is the gate. This is the gate to get to that 93.5.
Got
So
it.
if this gets broken here at this 91.5, are we going to see this float up, get completely roof pulled, or are they just going to dump it on us?
Yeah.
Who knows? So those
I
are
have
things to
another thing I
watch.
wanted to ask you about. and this is kind of open question for both of you, right? Earlier, you had spoken about the risk to reward ratio,
Right.
and we don't generally go into that very often. I think this is probably one of the first times you've really kind of shown us, okay, you hold out, this is 2%. And if not, this is a little more than 2%. But I want to touch on that a little bit. How can someone, if they're trying to really like get into trading,
Hmm.
maybe recognize some of those things that you're pointing out? Because I think a lot of people think risk to reward, like, risk reward, it's okay, if I don't ape in now, I'm going to lose out. And that's kind of the risk reward mentality, right? So how can they get more of this sort of educated approach and
Sure.
the actual, go ahead.
So I'm there are I'm sure a lot of people who are better at explaining risk management than I am, and I would say that there are there are different approaches to risk management, and one approach that I use a lot is position sizing, right? So the less confidence you have, or the higher you are on your entry, uh, the smaller your position size should be. When I scale in and out of trades, what I'm attempting to do is basically build a pyramid, right? My smallest entry at the top, my bigger entries at the bottom, to draw my average price closer to the bottom than to the top. So my top piece might be 10% the size of my normal order, and I scale down, right? And if there's drawdown, you can decide whether you want to close out those trades or you want to ride them out. A lot of times I'll close out a trade to save it from going into the red, save a profitable trade from going into the red. But more often than not, it's hard to go back and get an entry that is better than the one that I previously had. Happened to me last night on ETH, right? We had that ETH dump. I had a great entry on ETH. I wasn't in a position where I was able to like watch the charts. I'd set this up a long time ago, and it closed. I took a nominal profit on it. I didn't lose money. Not losing money is goal number one. In terms of risk reward, there's a very simple tool on TradingView which can be very helpful, and this is a long position that shows you where your price is now, or you set it wherever your entry is going to be. You take the top to what your upside target is, and the bottom to what your stop loss level is, or what you think could be the breaking point. And if we're being very conservative, then is it the 200-day moving average for you? Is it the trend line? Is it the bottom of this channel, or is it all the way down to the 21-day moving average, which my experience has been, in crypto, things tend to wick lower than you expect. So you could get wiped out here with a tight stop. But let's say that you're running this conservative, a nice, responsible, conservative stop loss at the trend line, maybe a little below for an overshoot that takes you down to 4%. If you look at your upside potential from where we sit, right? We have resistance here at this 100-day moving average. That's, if you were to buy that and consider that to be the breakout, I think that would be a risky move. If we went to the top of that channel here, this channel that we've had established previously, that's less than a 1% move. If we take it up to this 2025 open, which I think is very, very strong resistance, that's only a 2.75% move. So the risk of 4% is far greater than the reward of 2.75%. You want something that is a reward that is going to be larger than your risk. Okay. So for this to be a profitable trade, and if you go, hey, maybe we're not going to reach an all-time high, but at least we're going to get back to 100. All right. That's a 10% move. You're risking a 4% move to the downside. You're risking $4 to make 10. That's a better setup. And if you believe that we haven't seen the all-time high yet, and you think that we're going to go to at least test the top of this channel to see if we could get back into, price discovery and that 7-figure Bitcoin that Michael Saylor seems to think is coming anytime soon. That's a much greater setup, right? 85% just to the channel. And that doesn't even, that's only $167 Bitcoin, $167,000 Bitcoin. So if your long-term view is up here in the stratosphere, then it's a pretty good setup. But if you're trading the short term, be prepared to get shaken out, because this 2025 Open is going to make or break some people.
Thanks for walking.
Did that make sense?
That. It did make complete sense. Yeah, and I appreciate you walking us through that and sharing that tool for anybody who may not be aware of it. Mark, is there anything
you want to just to summarize that, you want your reward potential to be greater than your risk potential, and if it can be 2 times or more, all the better, right? You can't always get that, but if you're only looking for a tiny scalp, you got to be cautious on the downside here, right? If you're looking for low profit trades just to do quick scalps, you got to be prepared to take some stop losses. So run them tight.
Yeah. Thank you. Mark, is there anything that you wanted to add to that, or any thoughts?
I think risk management is a very personal, it's a very personal subject. What might be reasonable risk management for me might be overly conservative or not conservative enough for someone else. I think, though, that in general, right, remember the game that you're playing when you're trading, which is always, like, no exceptions, to buy low and sell high. In general, the people that lose this game are the people that buy things at a high price, right? It's like the number one determining factor. Now, depending on your time resolution, that can mean a lot of things. For example, observing that the price of Bitcoin is up, millions of percent, might mean that, the time has passed on whether or not trading Bitcoin is a good idea. But in the day-to-day and week-to-week time resolutions, there's still oscillations there that you can take advantage of. I think in general, it does make sense to borrow from the wisdom of the crowds here. There are so many technical indicators, some of them better than others, but I still think that the very, very simple, moving averages are pretty good. They tell you the direction that an asset is moving in, and when you're like way above those averages, that means that the asset is trading higher than the average would have you believe that it should be trading at. And when it's below averages, it's trading at a lower price than that. And so if you only ever bought below the average and sold above the average, you wouldn't lose. That's an interesting observation. Now, of course, it depends on time horizons, because the averages do move over time. But in general, the longer the time horizon you're using, the slower the average is moving, the more conservative your movements can be.
Yeah.
I love a moving average.
Moving averages are great. They are I think they're massively underrated. Like, I remember when I first started getting into all of this stuff, and I went way down the rabbit hole on tools that I thought were unnecessarily, now I think are unnecessarily complicated. At the time, they were super exciting. I really started to look at things like Bollinger Bands, and my favorite at the time was something called the Ichimoku Cloud, which I favored because it seems to have predictive ability. But all of these sort of things that forecast a price pattern, I've found to be no better than a coin flip chance of actually delivering any good results, which kind of makes sense. That's the reason why things like the Black-Scholes equation work so well, is because there is a coin flip chance. But the one that really seems to work is just looking at the chart and asking the question, are we currently below the price that most other people have paid, within whatever our low pass filter is. And if we are below that price, then you're doing better than everyone has that week by buying now, right? And if you're
How do you
currently
know that though,
above
Mark?
that price, because that's what the average means.
Oh, by
right?
looking at this, yes. Okay. Really
Oh,
quickly.
right. You're saying using the moving average as a
The moving
benchmark
averages.
of whether people are buying above or
People are
below.
mostly losing.
Right.
Yeah.
Right,
if people have mostly lost this week, you can buy into their losses. Like that's kind of what you're doing when you're
if
trading.
people have mostly lost this week, they're doing it wrong.
Really fast before we
you know
move
what I
on.
mean?
Keith.
Do the opposite of what everyone else is doing. If the price is going up, you should be selling, and if the price is coming down, you should be buying.
Yep.
Keith Smalls is asking, what's the name of the tool in TradingView?
Oh, great question. It's actually one of their preset tools. Like if you go over on the left-hand side on the toolbar, you can see them, and it will populate whichever one you've used last. It's the one that will show at the top. But that's the long position tool. They have the same opposite for short position, but I'm obviously looking at this as a long, so it's just the long position projection tool. On the subject of moving averages, since Mark kicked that door open, it's also a good momentum trader. A good momentum signal to give us an idea of where things might be headed, where momentum is flowing. And if you recall, when we had these death crosses coming from the top, we analyzed this and we said, historically, this momentum's probably going to carry, even though these are lagging indicators. The momentum tends to carry. We could dispute what causes it. We could dispute TA and be in the camp that says, oh well, it only works because people believe it works. Well, maybe that's the reason, but guess what? It friggin' works. So whatever the reason is, let's just embrace it and understand what it is and how it's working for us. And the reason I bring this up is because the opposite of the death cross is the golden cross, right? So we eventually to get back on track in bull market territory and all-time high territory and bull market momentum, we need to unwind these moving averages. They are on the daily time frame completely crossed. So as you can see, the 21 is now pulling up towards the 50 and the 200 up towards the 100. We want these two to stay uncrossed, by the way. So if we can get this move above the 2025 open, then we are going to see an unwinding of these moving averages. We're going to see a series of golden crosses, play out over the next couple of weeks if this is a sustained move above the 2025 open. So I'm looking to see the 21 pull up above the 50 and then up above the 200 and up above the 100. And then if that happens, then the red 50 will drag up behind it. And then we'll have unwound moving averages and we'll be right back where we were before all of this craziness happened around the election.
Wait, where were we right around the election? Because you were talking before or after the Trump pump?
Right? This was the Trump pump is what blew things out of proportion. Okay. So we were unwound 2050. So yeah, we were unwound. Actually, the Trump pump did the final unwinding of the 100 and the 200. Blue is the 100, purple's the 200. Here's the Trump pump here on election day. But we were already on that trajectory ahead of that. So, look how wide the spread got and things got blown out. And obviously we started, the death crosses happened from there. So we're certainly nowhere near the clear. In fact, we're in my opinion coming up on the biggest hurdle, the biggest technical hurdle on the chart, and that's this 2025 open. Once we, if we can clear that, then we go ahead and we, maybe consolidate for a little bit before we go after 100K. We haven't had a successful RS flip at that level. Yes, we did live above it briefly, but you remember how many times we were, below and that just, was not sustainable. So one level at a time for me, as always. And this level right here is the most important one. It's right around
Speaking of
93.5.
levels, 93.5. Minnesota saying 68. Now 69 is something that you've been paying close attention to.
Oh, absolutely.
Right? Is that area still on your radar as much
absolutely.
as it was?
Like I said earlier, until we have a confirmed, all right, I got to get this out of the way. It's making me nuts. Until we have a confirmed RS flip up here, right? Until we are sustained above this 2025 open, in my opinion, the door is still open to make this move. Whether it's, we have some confluence here around 76. We already went and tested that. We could retest that. If that breaks down, we do have a little bit around this 71 level. There's another, I think, quarterly open around that level. Let me see. So yeah, around 71.5. So all of these things are still into play, but this timescapes that we've been messing with recently. This is a new indicator that we've been working on. Annual and quarterly, you can set it to whatever time frame, but a lot of times they get overshot, and so I kind of try and overlay that with my technical analysis. I would think that if we come down to this range, that 69 is a reasonable target for a wick. I do have bids placed in this range just in case. That's not idle money. I'm earning some interest on it on the USDC side, but yeah, I'm certainly not taking this target off the table until,
especially because you said, oh, I'm sorry, I'm so sorry. Go ahead.
I'm not taking it off the table until we have confirmed an RS flip up here, right? So maybe that confirmation comes by way of another retest of support that holds at the 200 or holds at the trend line. But until we're here, I don't think we're really in the clear.
Especially because you said that liquidity
is huge.
Can hold.
And it's
above and below, right?
Well, the liquidity up at 92 is building. And you can see there's new, there's some front runners coming in here. Like they're just dropping blocks in this range for some reason. We all just want to just let it go. Come on, guys, just let it go.
But I'm talking about the bid liquidity.
On the bid side, I think you can see it pretty well here. I can increase the contrast. When I increase the contrast like this, it makes it easy to see, but it throws off the scaling. So you have to use the tag tool to see what the actual values are here. But you can see that we have ladders of bid liquidity coming up near the active trading range, 89, from 89K. And, it's like we keep getting these icebergs floating up here right around the price, above and below, right? So there's a battle going on right here in this range. What I'd like to see is, well, it actually looks like there's some profit taking happening here, right? So, and we just saw a little movement of the CVD. I'd like to see the next whale buy begin and start pushing us back up towards this 92 to see how spoofy responds to potentially getting hit. Right? If price does go there, it's not likely to just blast right through it. Right. It's going to take a little while. Going to take a few minutes to get through that much liquidity. So they could potentially get hit and pull the balance of what doesn't get hit. But I would think that, they've been playing this game for a long time. They have to be in tune to where price action is now, and we just have to see how they play it.
Yeah.
But I'm watching it. I got a front row seat.
I did share materialindicators.com up there as well, but definitely something to, of course, to look into, follow Keith and Material Indicators and check that out. Mark, we haven't heard much from you. Is there anything, I had mentioned your Bitcoin Gold earlier in the call, is there anything, I know that you also said that you've had your head down, not really looking at charts and things, but is there anything that comes to mind, or any sort of exciting strategies that you might be seeing on Carbon DeFi at the moment, or, just on-chain trading specifically?
I haven't been, honestly, I just haven't been paying attention at all. I'm sorry. I know I'm kind of dead weight this week, but yeah, my hand, I've got my head so far into, what I'm currently working on.
You got exciting things going on your end.
Yeah, exactly.
Can you shed any light on that for us? Can you tell us what you're building or what you're working on? Or is it double top secret?
Double top secret.
What he told the community was not until the patent is filed, if I'm not mistaken. Something along the lines of that.
No, it doesn't even need to be filed. No, it's just the PCT. So all we need is the treaty, which is the provisional, and then I can start talking about it publicly.
Oh, so does that mean that you don't agree with
open sourcing?
Elon and Sam on open sourcing everything?
I've gone on the record before. I think open source is a terrible idea. In general, I think even so, one of the programmers that I really respect is named Jonathan Blow. And he's, one of the things he's known for is developing his own programming language, specifically to assist in game design. He's a game designer. And so he wrote a programming language called Jai, and he developed it explicitly for the purpose of designing his next game. And he kind of goes on these live streams, like he's got a Twitch channel, I think, or something, where he basically just, develops the game and develops the programming language live, and people can ask him questions and that sort of thing. And one of the things that he predicted very early on is that open source is going to result in a huge number of security issues. That, don't ever make the mistake of thinking that Lazarus Group in North Korea isn't paying attention to everything that's open source and injecting, nefarious code into those systems. And they are, and they have. And some of it has been detected and some of it hasn't been detected. I think that from a security perspective, open source is a horrible idea. And, in terms of the way businesses operate, with respect to who manages what and decides on what's important and that sort of thing. One of the things that Jonathan talks about is the fact that the people that do work in these kinds of open source projects usually aren't asked to do it. And so the reward that they get is, minimal. Like there's very little recognition. There's very little sort of oversight into the kinds of things that they do. So it's a huge waste of their time. And then for the people that have to review all of these things and decide what gets accepted, is also a huge waste of their time. Much better that people discuss first what problems are and how to approach them before anyone actually, decides to do work. It's just a very inefficient process, and I think that people like Sam Altman, like Elon Musk, might favor them because a lot of it gets done for free.
Makes sense.
We've had this debate quite a few times. It's always fun when it comes up too, like having this debate, especially because it's such a big part of just technology in general and blockchain specifically.
Well, anybody that's had their IP stolen,
Exactly.
or any manufacturer that's been knocked off in China, is sensitive to this stuff, for sure. I don't know that the general public is really necessarily in tune.
And and that's not to say that all open source is bad either. I'm just saying that it's like, there are millions of open source projects, and there are a handful that I can think of that have done really well. Things like OpenSUSE and Debian from like the Linux side of things have done really well. But then it's also worth paying attention to, the closed source, distributions of Unix that have done very well. Not the least of which is Mac OS, right? It began, it took an open source project and closed it, and now it's the operating system that everyone loves. And it, has completely destroyed its open source counterparts. Where the Linux community would disagree with me, and I hear those arguments. Like, I am a Linux user myself, so I sympathize. But there's no debating the fact that which one has achieved saturation, which one hasn't, and it's not the open source one.
Okay. Well, I know we're short on time. I just switched over to one of my favorite charts to watch, and that's
let's bring it up.
This comparison of Bitcoin dominance with total 3 dominance and USDT dominance. And as you can see, USDT dominance is plummeting. Purple is total 3 dominance. Or total 3, for those who aren't familiar, is essentially all altcoins with the exception of ETH. So no Bitcoin, no ETH, just alts outside of ETH. And of course, Bitcoin dominance, we know what that is. And then this dark orange is Bitcoin price. So we're seeing a resurgence in total 3, which means alts are on the rise. Before anybody gets too excited thinking alt season, alt season, alt season. No, I didn't say that. And the reason is because Bitcoin dominance is also on the rise. So this means that money is rotating out of USDT into Bitcoin and also into alts. And it's, throughout most of this, we've seen the money rotating into Bitcoin. We don't always see it rotating into alts. And so, select alts are doing well right now. Litecoin's doing pretty well. Doge, I think, is getting a little bit of a rally right now, although I don't know how much confidence I have in Doge at this point. I think Doge has a 420 anniversary or something that might have helped give this a little bit of a pump. But
speaking of 420 anniversary, Mark, happy birthday to Carbon DeFi.
Shut up. Really?
It was
2 days ago.
Yesterday, 2 days ago, it was the Carbon DeFi 2nd birthday. Yeah, and it was 420, as a matter of fact.
Wow.
Mm-hmm.
You look so old for 2. Not you, Mark.
I think it's great. Since then, you've seen all of these licensees and deployments, and
What's
so
2
congratulations.
What's 2 in blockchain? What's 2 in blockchain project years?
It's like 200 years at least. I can't believe, when someone said it, I couldn't believe it's only been 2 years. We've accomplished a lot. I'm very proud.
You guys have done amazing. You've done a tremendous amount of work in that time.
Yeah, huge amount of work. We've published papers, and I do appreciate it. I'm very, very proud of everything the project is doing and what the team has been up to over the last couple of years. I think we're getting great results, but important not to become complacent.
No, you're complacent in this game. You get passed in your sleep.
That's why Mark doesn't sleep. On that note, Keith, I didn't mean to cut you off. You mentioned birthday, and it reminded me to wish Mark and Carbon DeFi a happy birthday. But I didn't mean to cut you off.
Wait, did Mark also have a birthday?
No, I just mean Mark. No, I mean Mark because he created Carbon DeFi. Okay. It's kind of like that's his baby. So yeah,
baby's birthday.
Yes. But
that's awesome.
We were looking at your previous chart. Was there something here that you wanted to show us before we?
No, I think we covered it. I was just showing that some alts are benefiting from this because we're seeing some money rotate back into alts.
Nice to see.
For those who like, I don't know if we're going to see an alt season like we historically know an alt season, but for that to happen, what we need to see happening on this chart is the the loss of USDT dominance, which we're seeing. That part's there. The increase in total 3, that part's there. The missing link is the decrease in Bitcoin dominance. So you need to see a divergence between Bitcoin dominance and total 3. And at the moment, they're both moving in the same upward direction.
Now, really quickly, I know that we said that there's not enough. Mark, I know that you might have a hard stop, so if you need to drop, I completely understand. It is the top of the hour. But if you have one more second, or, Keith, if you have one more second, Mark, you don't have to if you can't. Historically, though, I know we say that, we look at this and everybody says, okay, well, this is what it's always done, but how many actual data points do we have? This is something Mark is big research scientist, right? Like, okay, we get it. But when we look at when alt season did occur, wasn't it when Bitcoin reached that all-time high? Like, we haven't even touched the all-time high, the previous all-time high yet.
It's important when you're doing these kinds of things that, like, first of all, never confuse correlation and causation, right? There's this really great website that I often refer people to, called like spuriouscorrelations.com.
What is it?
And it has these spurious correlations. It's amazing.
Spurious.
It does things like correlate the number of films that Nicolas Cage has starred in that year with the like rate of death by drowning in a swimming pool, right? And they follow perfectly. So it just takes these like really, really, like, it's making the point that of course these things aren't related, but the data is so convincing when you see it, and things like, price charts can definitely do that to you. But when you get underneath it and you find a causal element, or something that you believe has a strong causal influence on the data that you're seeing, then it's different. Now it's no longer a spurious correlation, and now you're actually doing science, right? Or at least doing proper analysis.
Right. So for example, XRP and Solana are climbing right now because of all of the ETF news around those assets. That would be a catalyst that would make sense.
And yeah, that it certainly is has good explanatory power. But in general, I think for alt season, meaning the entire asset class rising, the thing that I think has very compelling, explanatory power is the fiscal policy, right? When we're in quantitative tightening, it makes sense for like the really risk on assets, and altcoins are certainly that, to become less interesting. And when we're in quantitative easing, it's not just alts. Like, alt season also correlates with things like avocado season, like when the price of things all over the place start going up, because actually it's the value of the dollar that starts coming down. And that's, I think, what really caused alt season the last 2 times. And the fact that they just happen to coincide with the top on Bitcoin probably means, either those things are related or they're not. But I think that one of them could be a coincidence that we pay less attention to, and the other one, I think, has much stronger explanatory power. So we'll see. At the moment, we don't have QE, so I think better to be patient.
And I don't think we're getting it this. I don't think we're getting it this month.
I don't think we're getting it this month either.
Okay, well, you guys are amazing, as always. Thank you so much. Thank you to all of our viewers as well. Smalls, thank you for your question in Minnesota for your 68K. Kind of curious to see if it hits that point that we've been talking about for a minute. Nobody hate me for saying it. But like Keith said and Mark said, still a possibility. So we'll be looking at that 93.5, I think, at the end of the day, was that kind of key resistance sort of flip we're waiting for, right, Keith?
Yeah, for sure. So let's see if there's any change here on the liquidity side. Not so much at the moment. So just going to, continue to watch this closely and see if this zone right here changes. Right now,
it is worth pointing out that the book is pretty thin to the downside.
yeah, well, it is, but not as thin as it may seem, right? So all of this, the shading is relative to the brighter spots in the chart. So if I took this out, you wouldn't really see any of it because there's not a lot in
Right.
this price range next to it. So it's pretty thin. Let's see what these are. So this block right here is 8 million, 9, 10, 11, 12, so yeah, these are like little $1 to $4 million little blocks here. But the fact that they even exist at all is helpful. Like I don't think this is spoofy, right? So, and this is how this works, right? We just see little increments, little blocks coming in that continue to stack above here. So I want to see more stacking above this 86.5 level, and it doesn't necessarily even have to be right here at the active trading range. When we see liquidity come in above this level, it tends to push price. And so, you can see how that's happened here, right? When this appeared, what happened? Price moved up. And so it's okay if these aren't all huge walls. In fact, the fact that they're smaller, $1 to $5 million makes it seem more legit to me, right? If 50 million showed up here all of a sudden, I'd be concerned that it was going to spoof.
Right.
So this
Awesome.
this just feels more organic to me.
We like organic.
Yes.
Okay.
In our order books and our avocados.
I haven't been able to find avocados. That's a whole nother topic. I will let you guys go before I mourn my avocados in Arizona. So thank you both again. Thank you to all of the viewers. And next Tuesday, definitely give the guys a follow for sure. And we will see you all next Tuesday.
All right. Thank you. Always fun. Thanks,
you guys. Always fun. See ya.
Bye.